Hello, everyone. I am Michelle Welsh, and I'm joined by Verdant's Chief Investment Officer, Megan Horniman, and this is episode 3 of Markets with Megan. Good morning, Megan.
Good morning, Michelle. How are you?
I'm doing just great. What are we here to talk about today? How are you going to help us see through the headlines?
So today's a pretty big market moving day, and we've got a couple pieces of economic data this morning. First was on the labor market, and the second one was an index that we look at called the Leading Indicator Index, and it's comprised of a bunch of different economic data points and gives us kind of the direction going forward of what the economy can do. Some of the things that it looks at is, building permits, manufacturing orders, jobless claims, the stock market, credit conditions. And what we're seeing is that index has been negative now for 13 consecutive months. We've never seen that much of a consecutive month-over-month decline, that index, that has been outside of a recession. So it confirms our view that we've been warning, our viewers about, is that the economy is most likely headed into a recession this year. Data point we got was on the labor market, and that's what's causing today bond yields to move higher. It's causing some weakness in the equity market because the jobless claims came in better than expected. So people can understand jobless claims are the amount of people that are going out to a file for unemployment benefits. And typically that is a leading indicator into the other labor markets economic data that we get, which gives us a big picture of, where is the employment picture in the U.S. We've seen these come lower, so people are concerned that the labor market still remains very tight. And yes, it is good that for people looking for a job that this has come lower, but we have to also filter through some of those headlines, and that's what we do here on this podcast. The past couple of weeks have been higher, unfortunately, because there's been some fraudulent claims in a couple of different states, and more states are now coming and finding this. So we've seen a big jump in those, and now we're seeing that give back. But the point to take away from this, if you just look at where jobless claims and even those people that are filing continuing claims, where that was, 8-9 months ago and where it is today, the trend is higher. So that means that the strength we've seen in the labor market is probably not sustainable, and we'll see some weakness in the labor market as well this year.
Okay, well, that is a lot to absorb. And like we try to do each episode of Markets with Megan is give me the 2 headlines and tell me what we're hearing and what may or may not be accurate about those headlines.
So you're going to hear some about the labor market being strong. We still do think there's a lot of cracks in the labor market. The economy is weakening. We're seeing that with many different economic data points. So we don't think that we're going to be able to skirt a recession this year. Unfortunately, that's probably still going to happen.
Okay. Well, thank you so much, Megan. Appreciate your insight. And for everyone who's listening, thank you, first of all. And secondly, if you have comments or questions, please email us, podcasts@verdants.com.
Thanks, Michelle.